Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. And today is August 8th, 2022. And we're going to go over your three threes for the week. We're going to go over our three top market movers, our three favorite and our least favorite asset classes, and how we're positioned on the equities and on the bonds. So let's jump on in.
Okay, let's go over the top three market movers for August 8th. Number one is Friday's jobs report. Number two is the Inflation Reduction Act passes the Senate. And number three, the CPI report comes out on Wednesday. All right, Friday's jobs report was an astounding 528,000 jobs were created in July, which doubled the estimate at 250,000 jobs. So it was about 35% higher than the last 4 months, and about 10% lower than what we saw in 2021. But it was an amazing number at 528,000. So the Fed now will probably raise interest rates by 75 basis points at their next FOMC meeting on September 21st. But something doesn't sound right. What's in the numbers? And so we went behind the numbers to find out. Well, what we found out is these weren't good jobs, right? We actually lost 71,000 full-time jobs, and we gained 384,000 part-time jobs, and people that have multiple jobs went up 92,000. So what's in the numbers? Not great jobs, okay? Now, with all the kids going back to school here this month, I'm estimating that we're probably going to drop below 400 and maybe even touch 300 come August. So we shall see, but keep an eye out for a drop in jobs coming next month. All right, number two is the Inflation Reduction Act, which basically was the slimmed down version of the Build Back Better bill that didn't pass last year. Well, it passed the Senate and now heads to the House on Friday. Some of the main components were it was the largest climate investment in history at $400 billion, and that's for EV, for tax credits back to cars, to solar panels, things along those lines. Now, the IRS also had its largest funding ever at 80 billion, 87,000 agents over the next 10 years. Well, this puts the IRS bigger than the Pentagon, the Department of State, the FBI, and the Border Patrol combined. So a large funding to the IRS. I'll leave it at that. A creation of a 15% corporate minimum tax rate, which will now tax corporations making over $1 billion in income. And that's like ExxonMobil, Amazon, Nike, Bank of America, Ford, some of the largest companies out there will now start to get a tax. And I'm hoping and praying that they don't pass that on down to us in the form of higher inflation. We can just hope. The next one is prescription drugs. Medicare will now be able to negotiate prescription drugs for about 10, but that won't happen until 2026, but a win's a win. The next one is the Affordable Care Act will now be able to extend their subsidies and give help to about 3.1 million people that have the Affordable Care Act. But what's in a name? Okay, the Inflation Reduction Act. Well, Democrat Bernie Sanders came out on Saturday while they were voting and said, according to the CBO, this bill will in fact have minimal impact on inflation. The taxfoundation.org also came out prior to this bill and said it will actually reduce GDP moving forward. So you have a bill that's actually reducing growth, and it's not affecting or reducing inflation. So a more appropriate name would have probably been a Climate Change and IRS Bill 2022, not the Inflation Reduction Act. But I digress. All right, number 3 is the CPI reports, and that comes out on Wednesday. Now, last month, if you remember, we were at 9.1. This month, we're coming in lower at 8.7, at least what that's the estimate. And that's because of oil prices. Oil and gas have come down, so that will probably bring down the headline number. But the core inflation, which excludes energy and food, is rising. They see that going up to 6.1. So again, that's why the Fed will probably raise 75 basis points heading into next month's meeting. So they've got to fight off this inflation, even though oil prices have come down. All right, let's go over the top 3 asset classes for the week. T-bills, US dollar, and the 10-year Treasury bill. The defense is still on the field and it's the primary driver of this market. We're in a bear market still. Now, we can have things go up, but the main components are still in the top 3 asset classes. The bottom 3 asset classes are global equities, commodities, which used to be in the top 3, is now in the bottom 3. And we have gold barely in at the bottom 3. So that's kind of where we see the asset classes for the week ending August 8th. Now let's head to the board to see how we're positioned for the week of August 8th.
Okay, let's go back to the board. I know I've gone over this graph many times, but as you can see, we avoided bonds for the majority of this year so far. But about 3.5 weeks ago, we started buying bonds again. And since that time, we're up about 1.2%. So far, so good. So we will kind of see where this goes. But so far, we're buying and nibbling at bonds and hoping that this is the bottom for bonds. Okay, let's go over the equity side. I know we've gone over this many times also. About 2.5 weeks, we started nibbling and buying certain equities. And so far, so good. Since that time, the S&P 500 is up 4.7. But as I went over last week, there is a kind of large resistance zone that we've entered that we've kind of got to get through if we're going to go ahead and start getting back into a new bull market. So what we have here, it's about in the 41.15 to 42.35. And again, I went over that last week and said we're probably going to stall. Well, we did. For the week, the S&P was up about 0.3 and the Dow was down about 0.2. So we're just stalling in this to figure out, are we going to go ahead and break to new highs, or are we going to go back down and retest? So what we say when we are in a bear market like we're in, we want to be renting, not owning stocks right now. We want to rent. We hope that we're going to go ahead and own them, but right now we're just kind of testing the waters, so we're just renting them. We'll see, and we hope that we're going to continue to own these moving forward. That's it for the week. Please don't forget to subscribe and like. And our next update will be Monday, August 15th. And we look forward to seeing you there. Thank you again for joining us and have a great week trading.